Oxford Economics predicts housing market deterioration despite growth slowing. The housing market's downward spiral is set to continue, and it's a worrying trend for many. Oxford Economics has highlighted two key factors that are driving this deterioration. First, mortgage rates remain stubbornly high, currently sitting at nearly 7%. This is a significant barrier for potential buyers, especially when combined with the second factor: home prices. Prices are a staggering 55% higher than they were just a few years ago, making it incredibly challenging for buyers to enter the market. But here's where it gets controversial. Despite these high prices, the supply of existing homes is creeping up towards pre-pandemic levels. However, it's not increasing fast enough to meet demand. A recent report by the National Association of Realtors and Realtor.com shows that inventory is rising, but not by a significant margin. Oxford economics analyst Matthew Martin warned that this combination of high prices, elevated mortgage rates, and concerns over the labor market will keep buyers on the sidelines. He predicts that the market will continue to deteriorate this year. And this is the part most people miss: the impact on builders. Home builders are facing increased costs due to tariffs and a reduced labor force, making it harder for them to keep up with demand. As a result, they're offering incentives and price cuts to move unsold inventory. Daiwa Capital Markets analysts Lawrence Werther and Brenton Stewart agree that the lack of inventory has supported high prices and sluggish sales. They believe that substantial improvement is unlikely in the short term unless mortgage rates or prices ease, addressing the current affordability challenges. Affordability is a major issue, not just for buyers, but also for builders. Lawrence Yun, chief economist for the National Association of Realtors, highlights that home construction is lagging behind population growth, which is holding back first-time buyers. Realtor.com chief economist Danielle Hale adds that the progress in making homes affordable has been concentrated in specific regions, primarily the Midwest and the South, leaving many areas still struggling. However, Oxford Economics predicts a much small glimmer of hope. They believe that due to labor market concerns and weak demand, home price growth will slow, and builders will limit new construction. This could provide a floor for sales, but it all depends on the health of the labor market, according to Martin. Despite the housing market struggles, Oxford Economics forecasts that the U.S. will avoid a recession this year. They predict that the Federal Reserve will start cutting rates aggressively at the beginning of 2026, which could provide some much-needed relief for the housing market and the economy as a whole. So, what do you think? Is this a temporary blip, or are we heading towards a more prolonged housing market crisis? Share your thoughts in the comments below. House prices falling. What it means for the economy and homeowners. 2025 update. The U.S. housing market is sending a chilling signal, and it's one that could spell trouble for the entire economy. Home prices are falling across the nation, and while this might sound like good news for buyers, it's a red flag for the broader financial landscape. But here's where it gets controversial. Could this cooling market be the canary in the coal mine for an impending economic downturn? Let's dive in. According to Zillow's Home Value Index, a trusted monthly tracker of housing trends, national home prices inched up by just 0.2% year over year in June. That's a dramatic slowdown compared to the 3.2% growth seen in the previous 12 months. And this is the part most people miss. While the national average might seem stable, the story is far different at the local level. A growing number of metro areas are witnessing price declines, and the trend is accelerating. ResiClub's analysis of Zillow's data reveals a startling shift. 110 of the nation's 300 largest housing markets, a whopping 36%, have seen home prices fall since June of last year. To put that in perspective, only 31 markets were in this situation in January. Cities like Austin, Texas, down 5.8%, Tampa, Florida, down 5.7%, and Miami, Florida, down 3.8%, are leading the decline. Meanwhile, prices are still rising, though modestly, in areas with tight inventory, particularly in the Northeast and Midwest. Why does this matter? For starters, falling prices can make homes more affordable, potentially opening the door for renters to become buyers. But there's a flip side. For millions of Americans, their home is their largest asset. If prices continue to drop, homeowners might delay selling to avoid taking a loss, shrinking inventory and stalling the market. And here's the kicker. Economists warn that a cooling housing market often precedes broader economic troubles. Could this be the first domino to fall? The numbers don't lie. Resi Club's data shows the tide turning rapidly. From 31 markets with falling prices in January to 80 in March and now 110 in June. Mortgage data firm ICE echoes this trend, noting that annual home price growth slowed to just 1.3% in June, with 30% of major markets seeing prices drop by at least 1% for recent peaks. Andy Waldham, ICE's vice president of research, points to rising inventory as a key factor. It's making homes more affordable, but also discouraging sellers from listing. Speaking of inventory, Realtor.com reports a sharp increase in active listings in 2025, jumping from 829,000 at the start of the year to nearly 1.1 million in June. This follows a historic low during the COVID-19 pandemic when listings plummeted to 347,000 in February 2022. But with more homes on the market, buyers have the upper hand, and sellers are feeling the pressure. Mark Zandi, chief economist at Moody's Analytics, recently sounded the alarm, calling the housing market situation a red flare warning. He blames persistently high mortgage rates, which are dampening demand and threatening to push prices even lower. Housing will soon be a full-blown headwind to broader economic growth, Zandi wrote on X, adding to concerns about the economy's future. So what's next? Federal Reserve Governor Adriana D. Kruger notes that the housing market's fate hinges on the nation's uncertain economic outlook. But the question remains, is this just a temporary blip or the beginning of a deeper crisis? Here's where you come in. Do you think falling home prices are a blessing for buyers or a warning sign for the economy? Let's debate it in the comments. Your perspective could be the missing piece of this puzzle.